Hey everyone, how's it going? I apologize. I've been absent for quite a while. The past few months have been pretty hectic and been taking care of a lot of things, but I am back and ready to create a little more content here, but kind of approaching it a little different because I did get some feedback on my post before on both my page and channel saying that there are some topics I was explaining that really didn't make sense, was a little too complicated for most because I'm aware that most of you are not that into investing. Like, it's not your career choice or anything. So some terms I may use or sometimes whatever I talk about might not make sense. And then for those that are actually traders, well, I haven't really been putting up that much anyway, so got to catch up there. But figured I'd start with this. Been getting a lot of inquiries on GameStop 2 weeks straight, actually. And even before the big rise, people were looking on Wall Street bets because people were talking about GameStop before, that crazy week we had where it went up like 1,500%, like absolutely historical. But people were asking me, should I get in this? Should I get in this? And in the beginning, before, it went up 1,500%, like when it was in single digits, I said, well, maybe because, there's a lot of shorts in retail, like malls, these like retail brick and mortar stores. And if you don't know what a short is, shorting is just the opposite of going long. So when you go long, you buy a stock with the anticipation that will go up. Shorting is just the opposite. You want the stock to go down. So a lot of people were betting against this name. And, I figured that it was a little overcrowded trade there. Like, it's been shorted for so long. And, GameStop, yeah, it might be dying out. I wasn't really a big fan of business, but I said, well, it might be worth a trade, like a bounce. So, for those that did that, well, that's great. But, it got pretty out of control. And I mean, honestly, the biggest reason for that is because, yes, it was shorted, but this isn't no ordinary short. This stock was shorted more than the amount of available shares for buyers. So theoretically, you could be 100% short a stock. And I mean, yeah, theoretically, but realistically speaking, that usually doesn't happen because in order for you to short a stock, you have to actually borrow that stock against a stock that a buyer actually owns. So buyers, they can't own more than 100%, right? So you can't short more than 140%, but sometimes buyers can actually request that their broker make sure that their shares are not borrowable. I know that's not a word, but I mean, basically have their shares so that they cannot be borrowed. So basically, it's really impossible to have 100% short because some people might just make it impossible for you to borrow their shares to short in the first place. But we're talking about 140% short. So is this illegal? Yeah, it's very illegal. How they were able to get away with it, I have no idea. But, the SEC, which is supposed to regulate this stuff, I mean, it's basically the police for the stock market. They don't do anything. They just watch, maybe they'll like pick on a few people, but I mean, that's really it. They don't really do anything major. But yeah, I mean, it doesn't make it right. And the reason why we saw such a big increase in the stock is because when you have high short interest in a stock, you have a greater probability of a short squeeze. A short squeeze happens when a bunch of buyers start buying the stock up, and now these shorts are underwater, or they're beginning to be. So out of fear that they'll lose money or they'll lose even more money than they already have, they'll cover their short, which means they close out their positions and they have to buy the stock, which adds even more pressure and ultimately creates a squeeze. Now, the reason why GameStop was able to go up so much as it was, and it had the potential to go up to 1,000 and even more, is because if you're shorting more stocks than there are in existence, you're basically opening yourself to infinite risk because there's not even that many shares available. So what's stopping you, right? So, I mean, that's what the Reddit army was doing until, it hit a dead end because basically Wall Street flipped the tables on them and just, yeah, they unloaded and yeah, now the stock's down. But it revealed to us a really big issue in the hedge fund community, just Wall Street in general and the upper elite, and what types of tricks and games they play. Because honestly, like, this isn't a new strategy. This is something that hedge funds have done for quite a while. And, you know, they do what the Redditors do. They find a stock that's highly short and they short squeeze the hell out of it, make a profit, and leave. So, you know, it's not fair for the media to portray them as different or, you know, manipulative, because if you say that about them, you have to point the finger back at the hedge funds and the upper elite on Wall Street. So obviously everyone is more aware of kind of what's going on. I mean, even though this has been going around for a while, the public is more knowledgeable now than it has ever been before on the shit that goes down with these funds, with the rich. I mean, this is what they do. This is why the rich get richer and the poor get poor. There's more reasons for that, but this is a big one. But I'm not here to really talk about GameStop. I mean, GameStop, definitely a big topic. There are plenty of videos made on the topic that you can check out. I'm not going to make another one because it's repetitive. But I did want to take the opportunity here to transition this into talking about an even bigger short. Silver, okay? So most of you, you know, you barely trade stocks for like a year, and now you're like, oh, silver? Like, what is this? So silver, you know, is a metal. It's a very important metal. It's actually been used as money for a really long time. But it's not just like, it doesn't just have monetary value. It also has a lot of industrial uses. In fact, arguably the second most important natural resource behind oil. So basically, you take silver out, modern society would cease to exist, essentially. And silver is probably the most manipulated market in existence. You thought 140% short was bad. We're talking about in the hundreds of percents, multiple hundreds. Get into that in just a second, but let's just take a look at a silver chart, okay? So this is a chart dating back to 1975, and we see that there's multiple price spikes here, okay? Now, I'll talk about these in just a second, but here we have the most recent one. So we're actually kind of in the midst of a spike right now. And the big reason for this spike was because, well, the media was saying, oh yeah, now the Redditors, they moved on from GameStop, and now they're moving on to the silver trade because, yeah, just like hedge funds were shorting GameStop, you have these big banks doing kind of the same. They're essentially shorting silver. And they're shorting silver that they don't even have. So they're naked shorting silver too, just like they did with GameStop. So the Redditors, I guess they got excited. Some of them did move over. Now, I'm going to tell you that it was not this whole movement for silver just recently. I mean, it's not like a recent movement that just got created because of Reddit. It's been around for decades. It's just that Reddit kind of rekindled the flames a bit. And yes, some of those Reddit traders did come over and they bought silver stocks and actual physical silver. So that created some excitement. So that's kind of why we saw a big movement up and a lot of media attention, you know, from like CNBC, Bloomberg. They were all talking about this. But the real reason for this is not because of the silver stocks. It's because people were purchasing physical silver hand over fist. I mean, this past weekend, the demand for physical silver reached such a point that sites like these bullion dealers like APMX, SD Bullion, they ran out of silver. Not completely, but they were basically wiped, right? To the point that they had to come out making a statement like, oh, we've never seen this much demand before. It's been like crazy and we don't have that much inventory. So like chill out, guys. And, you know, even after that weekend, we still have unprecedented demand and currently experiencing shipping delays of 10 plus business days. That is insane, which means that there's a ton of demand and not enough supply, right? And even some places, they have still temporarily suspended sales. I don't know when they're going to come back online, but even your local coin dealers probably are running out of inventory if they haven't already. And it takes a while to replenish that supply. But there's a big problem behind that too. There's a large imbalance, and there's a really good reason for that. So that really was the reason why we had such a big move in silver just all of a sudden. And I mean, this guy, he's a precious metals dealer, and he's just saying the entire silver industry is wiped out. It still kind of is. We haven't really recovered. So what is going on? Well, yeah, the price increased. So this is, I know this doesn't look like much in the grand scheme of things. So let me just break this down a little bit. Oh, that's terrible. How about this? No, how about this? Okay, this makes more sense. Okay, so we basically had the move recently, and this is where we saw a big uptick all of a sudden. Now, honestly, people were expecting something bigger. I was too, but hey, a gain's a gain. So we had a big increase, and honestly, we were poised to go much higher. But you see this big fat red candle. Oh, what happened? Someone shut the party down. Well, around this time, we had some news articles come out. CME hikes silver futures. Okay. What does that mean? So basically, people that are betting, I'm going to explain the most basic terms because futures is a little harder to understand. But basically, people that were anticipating the price of silver to go much higher, they have to put up even more collateral, right? Just in case they lost money, they have to put up more collateral to satisfy their margin requirements so that they can continue to trade. They did this because they realized there are probably some smaller players that are not as wealthy and don't have as much deep pockets as these monopolists on top, and they knew that by doing this they would chase them out because you have to put up more money. If they don't have the money, you're going to get liquidated. So that kind of helped really bring things down. But then this, miners decline as JP Morgan downgrades sector and silver prices slide from 8-year high. Okay. So the miners, the very guys that are mining these precious metals were downgraded. And, well, it doesn't really make sense, right? Because if the price of your metal per ounce is going up in value, then the miners stand to make more profit. Why would you downgrade a sector when it's going up? Are there other intentions, JP Morgan? Well, apparently there is. JP Morgan was caught multiple times manipulating the silver market, okay? And they call it spoofing, so it basically helps push the price down. And they were deemed a criminal enterprise by the country. JP Morgan, their metals desk was deemed a criminal enterprise by the United States. Yet they put out this. So it's not really surprising. JP Morgan wants the price of silver down. Silver's starting to go up. They just put out a hit piece. Downgrade the sector immediately because they have people naked shorting this commodity, naked shorting silver, while they don't actually have the silver. So to protect them, they downgrade the sector. What a move, right? So it all makes sense when you put all the pieces together. But hear me out here, okay? So usually when people first hear about silver, they think they found religion. They discovered fire. They're like, oh my God, this thing is so shorted. Let me take advantage of this. What they do is they'll probably just go type in silver ETF or silver stock or something, right? And what pops up is the Google search, top 5 silver ETFs. And well, you can click on this. What is the best silver ETF? iShares Silver Trust. This is also at the top of this list. Now, this may seem like a good play because, hey, silver is going to go up, right? But this is actually, the custodian of the ETF is JP Morgan. So you have a criminal enterprise that wants and is manipulating the silver price downwards, but they're the major custodian for an ETF. It's all a game. They're playing us. They're playing it. And anybody that's actually invested in SLV, which is the acronym for this trust, they are getting manipulated the hell out of their money by JP Morgan. Because every time they do this and the price of the ETF goes up and the price of silver does, all they do is print paper, pretend that's silver, they like write it off as silver, and then they short the markets. It's paper. It's not actual silver. They don't have as much as they claim. They are naked shorting this to a degree that makes GameStop look like a picnic. It's insane. And if that doesn't make it, like, if that doesn't sicken you already, look who's a major holder in SLV ETF. Yes, Citadel. The very guys behind this whole drama with Melvin Capital and Robinhood. These guys are a major holder, and for good reason. They are all in on this. They're all sleeping together in this endless orgy. And like I mentioned, how I would talk about what happened before. I mean, because honestly, what happened here and what happened here, it all rhymes. The same things happen. So the first time we see that this happening on this chart, 1979, 1980, this was when the Hunt brothers, they were really wealthy billionaires back at that time. And they got the idea of cornering the silver market. So basically they were just buying up a ton of silver, ton of contracts, just whatever they could get. At one point they owned almost a third of the entire silver supply, right? And that's how the price went from like $6 to $50, right? And they actually smelled blood in the water because they also realized the same thing. These banks, they don't have all the silver that they claim to have. So we're gonna make them bleed even more. So they just kept the pressure on, and it went crazy. But of course, the upper elite, they did not stay silent on this matter. They didn't just watch this price go from $6 to $50 without having to say anything. Of course, they intruded. So this is a great video. Parts 1 and 2 of this, they explain who the Hunt brothers are and kind of what happened here in a little bit more detail. I'm going to link this into the description so you guys can watch this because it's a little hard to find. But it's excellent at explaining everything that happened. But I'm going to go over just a part of this video. Basically, what happened is the Chicago Board of Trade, they forced higher margin requirements. They saw what was happening to the price of silver, so they forced higher margin requirements. Does that sound familiar? Yes. Hello? Same thing. Okay, and so they changed the rule there. Okay, great. And then the Hunt brothers kept going because they're like, you can't stop us. All right, whatever. Okay, then they changed the rule again a year later, and they suspended trading of silver and only accepted liquidation orders, basically selling orders. Does that sound familiar? Yes, it happened with Robinhood. Isn't this just like a terrible story? It's a broken record that just never ends. It just keeps on happening and happening and happening. The moral of the story, you can't win this game. I mean, these guys, they were billionaires. And they tried to corner the market, and they almost succeeded. But almost is never enough. Because, you see, they were playing on their turf. They were playing on the turf of the Chicago Mercantile Exchange, the Chicago Board of Trade, Wall Street. It was never in their favor to begin with. So they played it wrong. That's why we had that drastic drop here. And I mean, for the longest time, it remained depressed. That's exactly what these guys want. That's exactly what happened with Robinhood. So if you see if you can understand, that's why I'm saying GameStop's so much bigger than it is. Because not only did GameStop get totally stomped on because Robinhood and these, the upper elite just changed the rules on the traders, and I mean, really, they couldn't do anything about it. The same thing happened and is happening again with silver. It's insane. It's like a bad dream, but it's happening right before our eyes, right? History isn't always exactly the same, but it rhymes, right? And I mean, that's what's happening. So GameStop revealed something that's been going on for the longest time, and on quite the larger scale when we're talking about silver. So that's what's happening. And, all of this, right? I mean, the price got smacked, but people are still buying physical. Like, demand is still up the roof. Like, check this out. So I got a couple tweets here from people that are actually like dealers. They're inside the industry. Like they know what's up. Okay. And this guy is saying, hey, Chris, it's fucking insane. I've been getting between 400 and 500 emails a day for the last week. APMX stopped taking orders of silver. APMX is that these guys, you can actually buy silver there, but APMX stopped taking orders of silver until the market opens up later tonight. They were referring to Sunday. They must be massively naked short. Over the last week, we've been doing 5 times anything I've ever seen, including the craziness of last year. And last year was actually a pretty big year for silver too. But we're already surpassing that, and it's not even we're not even through the first quarter of the year. So there's that. Here's another person. Sure, the orders are overwhelming with brand new buyers and old stackers. People want to get physical silver regardless of the price. No one is flinching at the higher premiums. They want to get silver in their position ASAP. They are too busy. Lots of calls about buying. And then we had this one yesterday. The U.S. Mint, they're the one that make these coins, unable to meet surging demand for gold and silver coins. Unbelievable. Like, and that's kind of where we get to this disconnect, right? So, yes, obviously you're going to get burned if you play in the paper markets. If you're trying to trade these ETFs, if you're trying to trade these futures, you're going to get stomped on. But there's a difference between silver and GameStop. GameStop, there's no tangibility to the shares. Yes, you could buy a share, but technically the company can just make new shares out of thin air, which is really what they should have done to raise more money for the company. But I don't know if they did that. Can't confirm. But for silver, you can't just make that pop out of thin air. You actually have to mine that out of the ground, refine it, do a dozen other things to it before you can actually sell the dang thing to the consumer, right? Or industrial purposes or for commercial reasons, right? So you can't just create that out of thin air, which is why when these banks are shorting silver, they're literally creating silver with paper. They're just printing paper and they're just calling it silver. And that's where we're getting a disconnect because JP Morgan and these banks claim that silver is only worth, check it, $26.95. That's spot price or fake price. The real price, though, is nowhere near that. In fact, we're almost at around like a 40 to 60% range of premium to what the actual quote-unquote spot price is. So if we take a look here, the Silver American Eagle, which is a staple for silver coins, in America at least, I mean, at the time this was taken, it was selling for more than $40. I mean, really, like around Monday and even Tuesday, you couldn't even find coins for less than $35. So, I mean, the American Silver Eagle, though, I mean, if you compare that right now, it's still at like, what? $39 if you can buy like 1,000 of them. Or more. Most people are not going to buy that much. So let's be a little more realistic here and just call it at the medium. $40. Okay, so $40 is the actual selling price, and the spot price was $26.95. We're at a $13 premium. About. That's insane. That's insane. That's like 50% more than the actual spot price. So what's the real price? Well, I would say the real price is reality. Like, what are people actually buying this for compared to what the banks are telling you that it's worth, right? I mean, even these silver buffalo rounds, they're like good starter ones for people that are just like starting to buy silver. I mean, these guys, $33. That's a $7 premium to $26.95, just about. This is the real price. And if you actually take a look here, look at this. All of these, they're sold out. That's why they have alert me buttons. This is a pre-sale. They're taking pre-sale orders available February 18th. That's 15 days from now. It's a lie. Like, everything that they're telling you is a lie. Like, they're obviously manipulating, and you know, they're getting away with it on the paper markets, but in reality, no one's paying No one's paying that much for that. No one's selling for that much. It's stupid. It's absolutely stupid. But this is what differentiates silver from GameStop. And a lot of the movement behind GameStop was to stick it to the hedge funds, give them pain, and really put a dent in Wall Street. And they did it to a certain extent. I mean, Robinhood and all these other funds, they're probably just going to raise more money, and they're just going to reshort the stock and continue manipulating. So there's really no reprieve there, I would say. Like, it was temporary reprieve, I guess, but that's just one hedge fund, like a couple hedge funds. That's it. In the grand scheme of things, it's microscopic. And silver obviously gets at the heart of the monetary system. It's a hedge against inflation. It has monetary value. It's been used for thousands of years, and it's being manipulated to a further degree. Like I said, it's the most manipulated metal, or just like commodity, or just thing in general ever. And yeah, they're getting away with it on the paper markets, but that's the paper markets. Thank God there's actually physical silver. So kind of what's going on here, and the reason why this move here was really due to actual physical demand of silver. I mean, this has been going on for a while. It's not really the Reddit traders, but the reason why it's been going on for so long is because it is the Achilles heel of the financial industry, of these elitists, these bankers, the top 1%. It is their Achilles heel. By buying physical silver and demanding delivery of that silver, which these banks don't have, we are essentially breaking the system. Because if they don't have that silver, they're going to have to buy it from the open market to deliver that silver. And what are they going to buy it? Well, whatever the people are actually selling it at in reality, which is not $26.95, but they're going to be buying it at $40. They're going to be buying it at these higher premiums because that's actually what it's worth. And in fact, I mean, if you adjust silver for actual inflation, it should be triple digits easily, over $100. Like, it's so undervalued, even though it's like so essential to everything we do in life. And it's going to be essential for solar panels, electric vehicles. It's still being used in healthcare, still being used in just about everything, electronics. Like, your computers, your cell phones, all relies on silver. Without it, we can't function. Yeah, it's so undervalued compared to like even gold. Like, compared to gold, it's still undervalued. So you have to buy physical silver. Like, ETFs, futures, options, these are all great, like temporary things. May look good at first until you get smacked down by a margin raise or downgrade from JP Morgan. But buying silver is the key. And I mean, let's think about it. We've used silver, gold for thousands of years as currency. Why did we stop using it? I'm going to talk about that in just a second, but I mean, think about it. Silver and gold, that is real money, not this paper stuff that we're using, not this monopoly money. So you need to get some, because this, I mean, that besides the fact that it's real wealth, there's a lot going on in our economy that's justifying buying this, because it's insurance. It's a hedge against inflation. It's protecting your wealth, because every day your wealth is getting destroyed. So I'm going to explain just, kind of more on that in just a second here. And honestly, if you don't want to listen to that part, that's fine, because I mean, I really got through most of the important topics I wanted to cover here. But if you want to buy silver, I mean, I highly recommend that. And if you want to know where I get mine from, just reach out to me, and I'll let you know. So you can also buy an ETF. Do not buy SLV. That's just stupid. Unless you're going to buy like call options. If you're like an options player, if you don't know what that is, don't worry about it. But if you're like a call options player, then sure, you can buy like call options on the SLV. That's fine. But if you don't want to buy physical, or you can't, but you still want to be invested in silver, that's actually legit. You can invest in an ETF called PSLV. So P as in Patty, S as in Sally, L as in Larry, V as in Vicky. PSLV. That's the Sprott's Silver Trust. And that one is legitimate. Like whatever you buy in terms of shares, you can get compensated with silver. So actually buy that if you want an ETF, okay? But if you do have the money and you're willing, get you some actual silver. You don't need to empty your entire savings account and buy all the silver you can. I'm just saying, like, make sure you're allocating a good portion of your wealth into silver or even gold for that matter. But I would say silver more so because, I mean, that's really the topic of this video. And then after you do that, if you're still looking to get into like companies still, silver miners, they're great. I mean, these are the guys that are actually mining the stuff. And if prices are this low, but they're going to go up, and miners, they're already, you know, doing okay right now. Imagine the profit margin expansion that they're going to experience once these precious metals go up in value, which they already are. I mean, it's lunacy the prices that they're trading at right now. But so step one, get you some actual silver or buy a silver ETF if you absolutely cannot buy physical silver or you just absolutely don't want to for whatever reason. And then if you have spare money and you want to invest in companies, then buy the silver miners. If you want to know what I'm in at, just reach out. I'll let you know. So that's really it for that. Now, why though? Why is JP Morgan and these banks doing this? Like, they know that they're basically screwing themselves, right? Because they keep printing paper and pretending that it's silver or writing it off as silver, right? And now they see all this demand coming up, which is why they got scared and put out those two pieces. And let me remind you, these two news articles, these came out in less than 24 hours of each other. So they were scared. Like, they were really scared of what they were seeing, especially given the crappy economic situation we're in. But why are they doing it? If they know that they're going to get screwed because eventually the demand's so high, they're not going to be able to actually address that demand because they don't actually have that much silver. What's their end game? Well, they know that, you know, people are calling BS. Like, they know that. They're not that stupid, I would hope. Although they might be. But they know that this is a losing game. It's just buying them time. Because you see, the reason why they're pressuring silver down is because silver is such a good hedge against inflation. And there's so much inflation going on right now. And they know that silver should be much higher. But if they let silver operate in a free market, which it hasn't for a really, really long time, the whole U.S. financial system will collapse. Or whatever we know it will change forever. Like, they just know it. The time's coming. It's just they're trying to buy themselves time. And, you know, that's a whole nother topic, what they're buying time for. But that's essentially what they're doing. They know what they're doing. They know they're going to get screwed in the end. But it's all for a reason. So let me get into it. So to understand why they're doing what they're doing is to understand what's going on with the core of our monetary system. Okay. So what I have here is a Giphy of, well, I don't think that's Donald. I think that's his uncle or something. I don't know. Whatever. But we'll just call him Donald Duck. Donald Duck is diving into a coin of gold, precious metals. And he's having a great time. In fact, if that were me, man, that'd be nice. But now in modern society, I guess, he is walking around with paper, with the dollar, right? And, you know, as a society, we've been conditioned to think of this paper as wealth. And I mean, you know, using paper currency is not bad. We've used it for a long time. And the uses are obvious. Obviously, it's a lot lighter because, you know, metal can get pretty heavy. You don't want to carry like 60 to 70 pounds in your wallet. And it's just more mobile. You know, it's more convenient to use. And, you know, when it's pegged to silver, gold. So, I mean, that's really what we called the gold standard before. But all that started going downhill starting with the Federal Reserve. So the Federal Reserve is, I'm not going to go into too much details of who they are, but they were created on December 23rd of 1913. Now, despite the name, Federal, these guys are not part of the government. They are a private entity, and they make their own decisions that dictate free markets. So I actually like to think of December 23rd, 1913 as the day that free markets officially started to die. So we'll go into a little more on that in a sec. The second date we need to keep in mind is August 15th, 1971, which is the day that we left the gold standard. And I mean, you can bet that the Federal Reserve played a part in this. This is the reason why, I mean, up until this point, the dollar was pegged to precious metals like silver and gold, right? But from this day forward, that stopped happening. So, I mean, just to give you an idea, right here. So what we have here is a before and after of a $10 bill. So before, well, I mean, you'll notice this. Like, this is what we see all the time. This is what it used to look like before. Now, the picture of Jefferson is pretty much the same, but take a look here. $10 payable in silver coin to bearer on demand. Notice how that's no longer present here. That's what the gold, departing from the gold standard, did. Now we just have paper that's just floating. It's not backed by anything. So that creates a lot of problems, as you can see. So, I mean, initially, like if you pegged it to gold and silver, like it has some type of foundation. But once you get off of that, it gets kind of crazy. So if we take a look here, this is money supply, essentially, if you want to think about it, okay? So, you know, we're just kind of like cruising along here and, you know, just doing our thing. And, whoa, this is the financial crisis. This little bump here. Yeah, they started pumping money into the system. Now, people thought this was bad. Like, the scale of this, people thought this was actually really bad. I mean, yeah, it's understandable. It just like kind of takes like a near vertical takeoff there. And people got really scared. But, you know, the Federal Reserve was like, oh, no. Because the Federal Reserve, they're the ones that print all this money. They're like, oh, no. We'll be fine. We're just going to do it. And once the crisis is over, we're going to draw it back, you know? We're going to wind it back. And we'll decrease the money supply. So people were like, okay. Clearly that never happened. And we just kept going up and up. And you see this bump here? This is around 2011. This is when we had that second spike for silver about, and I mean, for good reason, right? I mean, what would you feel? They said we're going to be over with this monetary experiment after this crisis, but then they end up doing it again just a couple of years later. And then that never stops. And then kaboom, COVID. And here we are. This is lunacy at its finest. This is what happens when your money is not backed by anything, when it's not held accountable by the very things that kept it on the ground in the first place. The economy has officially gone high as a freaking kite, because there's nothing holding it down anymore. So that's why silver, and I mean, we've been brainwashed to think like this, right? I mean, have we ever paid for anything with silver or gold coin in our life? No. Have we ever paid with currency that, you know, looked anything remotely like this right here? No, we've never done that. So how would we ever know what real money looks like? We don't know that. But this is real money. Paper is not. Paper used to be a representation of it. Now it no longer is. And the Federal Reserve, they're just printing money over and over and over again. Like, it's insane. Absolutely insane. And, you know, most people, when they hear about the Federal Reserve and like how much money they're printing, they're like, oh, okay, like, why does that matter though? What effect does it have on me? Well, it has a lot of effect on you. Trust me. Let's take a look here. So when you print money, okay, you essentially create inflation. So let me give you an example. Bill and Fred, okay? There's Bill and Fred, two guys, and let's say there's a chicken, all right? Each of them have $1. And the chicken, they both want the chicken. But they only have $1. So, I mean, obviously, you're not going to go past $1. You're not going to go past $1 because they only have $1. But, you know, they'll stay kind of within that range of $1 or below for the chicken. Okay. Now, let's say the money supply increases. So from $2 total, because each of them have one, let's say now each of them have $5. Okay, 5. Now, Fred is like, oh, I paid like 60 cents for this chicken before. Let me take it for 60 again. But Bob, or did I call him Bill? Oh, I don't know, whatever. Bob says, okay, I have $5 though. So I'm going to bid you up and I'm going to buy it for $1. Or actually, you know what? And then they like have this bidding war, right? And then they go closer to like the $5 mark. It's such a crappy example, I'm sorry, but that's essentially inflation. It's not like the chicken changed. Maybe it has like a few more antibiotics in it, okay. But the chicken itself didn't change. It's just that we have more money in the system. And when you have more money in the system and each person has more money, they're willing to pay more and bid up that price for the same good. This is the reason why your great-great-great-grandfather was able to buy an entire acre of land, which is like 16 tennis courts or like 60% of a soccer field, for $1.25, and why today we can barely buy 2 pencils with that. Or it's the reason why if you see a penny on the ground, like decades ago, you would pick that up. But today, if you saw it on the ground, it's not even worth the effort to bend down and get it. It's not. Like coins in general, they're almost useless now because they can barely purchase anything. And I mean, as we see here, this lovely illustration of what's been happening to our dollar, you can see since the Fed was created, we've lost over 95% of our original purchasing power from that time. And it's going down even as we speak. Every day, inflation is eating at your money. It is destroying your purchasing power, and you can afford to buy less and less things every single day, every single month, every single year. And the Fed is responsible for that. But if you thought that was bad, let me show you a couple other things. So this is actually a graph of wage income gains, okay? And, wage disparity is such a big topic today, and obviously it's Congress's fault and the president and, just bad policies and politics. But let's take a deeper look. So, okay, we basically have everybody, even from the 95th percentile to the bottom 20th and the median, they're all basically on the same, path, right? And then they start diverging. Now, it looks like the divergence happens here. No. The divergence happens around here. And if you notice something, that's really close to 1971. Coincidence? Maybe. Let's take a look at another one. This is showing productivity compared to compensation. So, we hear the stories of how our families, only the father had to work back in the day. He could support the whole family. The wife could stay at home, raise the kids, feed everybody, own a car, a house, whatever. It's such a great life, right? But now our generation, millennials, we can barely afford rent, right? Well, and some people are out there working 3 to 4 jobs, and they're still barely making it by. The reason for that is because although productivity has continued to go up and we're working harder, arguably, our compensation has basically whittled off. Now, this has some implications in regards to technology for sure and other factors, but notice where it breaks off. 1971, around that time. Coincidence? Maybe. So, what is going on here? And, is the Fed really responsible for it? No, I'm not saying the Fed is responsible for all of this. I'm just saying the Fed is basically one of the major sources of all the problems that we're facing economically. From wealth inequality to not getting paid enough and people living in just abject poverty. The Fed is a big reason for that because they are destroying our purchasing power. Now, the rich, it's not like the rich have been doing anything different. They're just good at making money. It's just that as they continue to make their money off the poor, and then the poor, whatever they have left, their money is becoming worth less and less and less. You can see how that wealth gap can continue to increase at a pretty concerning rate. So, that's kind of what's going on here with the money. And I mean, they're just printing however much money they want. Democrats are talking about, and Democrats and Republicans are both responsible for this. I don't want to get into politics, but they are both responsible for this huge debt that we have amassed. I mean, look at this. We're at $27 trillion, $868 billion, 800 million, and I can't even get to this point before it starts changing on me, so not even going to bother. But you get the point. It's out of control. And even just this past year, 2020, 23.6% of all U.S. dollars were created in the last year. How? Does money grow on trees? Were we lied to our entire lives? Because I'm still trying to find that tree where I can find some Benjamins on there, because, that'd be nice. But still yet to find it. But apparently it exists. Like in some Garden of Eden that we have no access to, just the elite, they are printing this money out of thin air and just, making it work. They're paying off their debts. They're, saving the economy, if they want to consider it that. So yeah, it's pretty bad. Now, just to give you an idea of, hold on a second. I lost the picture. Hold on, y'all. Oh man. But yeah, it's bad, people. So here, let's take a look at this. All right. Got it pulled up. Sure. Okay, so if we take a look at this, this lovely illustration, we can see that $1 trillion in $100 bills. These are not $1 bills. These are $100 bills, okay? If you stack them up for $1 million, it's about the height of a chair, okay? If you stack it up $1 billion, it's taller than the Burj Khalifa, okay? If we stack it for $1 trillion, $100 bills, it's the space station is at 248 miles high. This would be 631. Like, forget the space elevator. We can just create a pile of cash and just climb it all the way to the moon. Like, really? It's a lot of money. Like, I don't think people understand. And we have over 27 trillion of those in debt that we're not going to be able to pay back. Like, I think people are still like they can lie to themselves. Like, maybe if you tell it to yourself enough times, it'll come true. But people keep thinking somehow that it's just going to go away, just like COVID was supposed to go away in April or Easter, like, it's just going to go away. Like, we're never going to have this problem. Like, if we just wait and just like kind of hide and suck on our thumb and, just count the days, we'll be fine. No, that's not how it goes. This is a real problem. And if we don't, I mean, even if we start addressing it now, we're probably too late, right? So I know a lot of doom and gloom going on. Oh, and here's a video of the Fed chair, Jerome Powell. If you don't know who he is, he's the guy behind this masterpiece of an economy. But yeah, he's the chair of the Federal Reserve. He's basically the leader. So let's take a look at this on how they make money.
Simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Just real quick. No, that's not another way to think about it. That's what it is. That's that's what it is.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve.
Like, what's funny? Well, besides the part that he says we have the ability to create money, like just out of thin air, they can just create it as long as they have paper and they got ink, they can just do it. But the best part is that he says it actually increases the money supply. Like, yeah, I definitely didn't know that one. Like, making more money increases the money supply. Mind blown. Holy crap. So yeah, there's that. This one is also really hard to find. I'm gonna link it into the video as well, probably. And for obvious reasons, they don't want you to know that they can just create money, that they can just, do whatever they want. And it's so bad because even though they're printing record amounts of money, this money eventually just finds itself back to the rich or never goes to the poor at all. As we saw with, every, like how the whole pandemic situation was handled, and the fact that we have even more poverty in all of this, even though we've printed all of this money, we're like worse off still. It's not solving anything. It's just creating more and more problems. And the problems preceding the pandemic were already being hugely caused by the Federal Reserve and the fact that we are inflating, just causing massive inflation and destroying the dollar. So all of you with savings accounts that have been saving your money, well, yeah, the Fed's actively destroying it because they need to inflate the debt away. And I mean, they're on a mission. They're really on a mission here to just to make sure that this flatlines all the way to zero. So that is what we're facing now. I know that sounds really bad, and you're basically probably going in your mind, well, okay, so you're telling us, so are we screwed? And no, you're not screwed if you take the proper action. So really, the reason why JP Morgan and them are hampering the price down and constantly manipulating it to levels that are just ridiculous is because silver and gold, they're very good hedges against inflation. And they know that if they allow silver to operate freely, as it should have, because it hasn't for decades, everyone will realize that the dollar is worthless and the financial system as we know it will collapse. All the people, but okay, honestly, when they talk about financial collapse, they actually make it sound like it's so bad for the lower class and the middle class. But who is really losing here? Like, who's really afraid? It's the people at the top, guys. The people at the top, they're afraid they're going to lose their hold on power. This is their hold on power. Money, that's how they control us. They enslave us to these like ridiculous workloads. As you've seen, productivity has gone up, but compensation has. But that's how people get enslaved into the economy. Like they live paycheck to paycheck. They can barely make ends. They can't pay. They can't pay the bills. They're in debt. They're in so much debt, and that's how they keep control over all of us. They have the monetary system in their grasp, but not completely, because we can still buy physical silver. And the fact that that's our saving grace, physical precious metals and buying it up, especially silver because it's so undervalued. There's more upside there, but they should be so much higher than they are if we adjust it for all. The fact that the silver per ounce was this high back in 1979, 1980, before this whole madness really took off, it's appalling. And even in 2011, you see this little bump here. Oh, not that one. Sorry, this one right here. You see that? That also caused a huge spike. Yet, even with this big increase here, we are lower than either of these points in history. Absolutely incredible. Absolutely incredible. And now we're going to put in trillions of more dollars into the economy. I'm glad. Like, people need help. But this is going to have some serious ramifications down the road, whether it's in the form of higher taxes, but ultimately the collapse of the financial system. I mean, it's coming. I haven't really thought about this like I have. I still had faith in the system, stupidly enough, up until a couple of years ago. You know, I've been looking at silver, precious metals for a long time, long time. It took me a while to pull the trigger myself, but I mean, it's happening, everyone. I mean, the signs are all there. The Federal Reserve, they can't, we're at a point of no return. They're going to continue printing the money. They're going to continue inflating the debt away. They're going to destroy the purchasing power until there's nothing left and it's just paper. I mean, hold on. Let me pull this up. Hold on. Where's this? Yes, here we go. Yep. Yeah, so if you know Monopoly, I think most people do. There's this one rule here that I don't think most people realize is actually so truthful. What if the bank runs out of money? Some players think the bank is bankrupt if it runs out of money. The bank never goes bankrupt. To continue playing, use slips of paper to keep track of each player's banking transactions until the bank has enough paper money to operate. Like, I don't know why this is like so funny, because I used to read this rule along with the other ones. You know, when I used to play it multiple times, because I would always forget what would happen here. And I always reread it again because I was like, wait, that doesn't really like make sense to me. But then I just kind of like rolled over it in my mind. I was just like, okay, whatever. Like, we'll just use some paper. But it makes sense to me now, just rereading it, how stupid this is, because it's in a children's game. We read it, we knew about it, but we can't even realize that it's happening before our very eyes in society. The banker may also issue new money on slips of ordinary, like, oh my God, these guys, they're crooks, they're criminals. Like, they are terrible people. They are literally controlling us with paper. That's it. They have no other claim to it. That's it. They create fear, oppression, like all this greed created with paper. It's paper. That's it. And you know, the banks, they've been talking about cryptocurrency. You know why? Because they're very interested in digital currency. Like the Fed has even talked about making a digital currency for itself that it can just distribute. If that happens and it happens success, it's game over, because at that point there's nothing stopping them. Like, yeah, you have precious metals, but it's just gone to such a point that it's just yeah, that's the end game there. That's what they talk about when they talk about a great reset. Anyways, I'm going a little over time here. Actually, I went on too long. I'm sorry. But anyways, the idea here is that GameStop opened Pandora's box. And now the public realizes that there's immense fraud and manipulation going on in the markets. And silver just happens to be the most manipulated thing on earth, even though it's the second most important natural resource, only behind oil, or you know, and without it, modern society wouldn't exist. And it's trading at levels like it's just garbage. Like it's trading at levels like it makes the dollar look good. My God. So, anyways, don't fall for this. Don't be a fool. Okay, these guys, they may control the paper markets, but in terms of physical, we still have the power. So if you can, go ahead, buy some precious metals, like, you know, silver. If you want help with that, let me know. I can point you in the right direction there. And, you know, if you don't want to buy the actual darn thing, then okay, go ahead and buy PSLV, the silver ETF there. Not SLV, PSLV, because if you buy SLV, you're only helping the banks and Citadel, right? And then if you have money left over, then you can buy some of the miners. I can give you some recommendations on what I'm invested in. But that is pretty much it. That was really long. I'm sorry. I'm sure most of you will have questions because that was like a ton of information. So feel free to reach out. Be happy to answer any questions that you have. And make sure to subscribe. to me if you're watching on YouTube. Like the content if you're looking on Facebook. And yeah, I'll be out with some more content in the next couple days here and just going over some more topics. Feel free to also shoot me any topics you'd like me to cover. I'll pin a post on the Facebook page, and then you can just like comment there if you have something in specific you want me to go over and whatnot. I would be more than happy to do that. So anyways, thank you for listening, everyone, and appreciate you all. Have a nice night. Bye.